It's what we continue our focus on banks this morning. It's been a good second quarter for RBL Bank with its bottom line growing by more than 60%. What's also reassuring is its stable asset quality. Vishwanath Nair caught up with the bank's managing director and CEO Vishwavir Ahuja and started off by asking him what led to that sharp rise in profit. Listen in.
It was a combination of good growth across all business segments, improvement in margins. I think margins in a sense improved more than we had perhaps planned or anticipated. And at the same time, the asset quality holding up well. It was quite stable. In fact, both the gross and NPA percentages came down. So credit costs actually came down. So it's a combination of the basic math here that worked in favor. And I think even though we are investing across the platform, we are investing in infrastructure, people, technology, and so on and so forth. But I think we were able to manage the expense growth also such that the flow through to profits was significant. Yes.
All right. Mr. Ahuja, you mentioned the margin number now. That has seen a significant jump. What contributed to this? Was it the low cost? What is it?
So, first of all, the proportion of our retail or non-wholesale loans is gradually increasing. And those loans are at much better yields. Yeah. So even though on the wholesale side, there is significant competitive pressures on pricing in particular, and those yields have come off. But I think just because of the mix change, we've been able to hold those margins well in terms of the overall situation. In addition, we've been able to bring down our cost of funds. Yes, and I think the reduction in our rates and therefore in the cost of deposits was pretty significant this quarter. And actually, if you see over a 1 year perspective, we brought it down 70 basis points, just the cost. And in terms of just the quarter, we brought it down 30 basis points. Right. So on a net basis, we could actually achieve a 20 basis point improvement in net interest margin, just sequential quarter basis. So I think that is what has worked.
Most of this reduction in cost is because of the cost of funds, or are there other costs involved which have come down significantly?
No, so like I said, first the yield on the asset side, sure. We managed to get a better overall net interest margin because of the mix of businesses. And then the rest of the effect has come in managing the cost side. Yeah. And in combination, this is there. And basically, these are the two main components. And from the cost side, I think CASA growth was significant. Yeah, it's 56% or whatever, Right. And again, the higher the CASA, the overall cost of deposits sort of comes down a little bit, and that helps.
What is the ratio like on the CASA front?
23.7%. Right. It's been the percentage and proportion has been growing steadily.
Fair enough. Now, just moving to the asset side. Now, this quarter, you also saw a significant jump in the advances growth. What contributed to this? Specific segments that you're betting on probably paid off?
So actually, this quarter, fortunately, all segments grew well. So we had significant, close to 37-38% growth on the overall book. Wholesale grew, non-wholesale businesses grew. So corporate, commercial, mid-market, agri, micro banking, and retail lending. LAP, business loans, small business loans, card portfolio, all of that grew. So, it was actually across the board.